Hi candidates, welcome to another session of manifested online classes. So we are still continuing with topic number 1. In this session, I want us to look on one of the subtopic, which is regarding recognition and measurement of impairment losses in accordance with the International Accounting Standard number 36. So in this topic, you're going to discuss a number of issues. One, we are going to define what is impairment. Then from there, we look on how impairment is measured and also recognized in accordance with IS 36. We look on some of the factors which may indicate that an asset could be impaired and therefore requiring an entity to carry out impairment review. And then later on, we are going to look on the determination of impairment losses as far as the cash generating unit are concerned. So, but to start with, we need to define what is impairment. And generally, when talk about impairment, this refers to the reduction in the value of an asset such that the recoverable amount of an asset is less than the carrying amount, meaning that once the recoverable amount of an asset reduces below the carrying amount, then in such a case we say the asset is what? Impaired. When talk about the recoverable amount, this is the amount now which can be recovered by the entity as a result of selling the asset currently or as a result of continuing to use the asset, in which case now the asset will generate some cash flows and basically the carrying amount. So if that recoverable amount is less than the carrying amount, then we say that the asset is what? Is impaired. So therefore we can start by defining what is impairment of an asset, and we can say that this is a reduction in the value of an asset such that the recoverable amount is now less than carrying amount, is now less than the carrying amount. So therefore impairment is whereby the value of the asset will reduce such that the recoverable amount it will be less than the carrying amount. So generally, therefore, what is important for you to know is that an asset will be said to be impaired if the recoverable amount of an asset, is less than the carrying amount. So in this case, we have these two terms here which we need to know their meaning, or basically which we need to define. We can start by defining the term carrying amount. So the carrying amount, in other terms, this we refer to it as the net book value, and basically this is the value at which an asset is recorded in the company statement of financial position. In terms of how we determine the carrying amount or the net book value, we take the cost of the asset and then we less the accumulated depreciation. But let's define what is the carrying amount. We have said that this is the value of an asset in the statement of financial position, and we are saying it is the same with the net book value. So meaning that the carrying amount, abbreviated as CA, or net book value, abbreviated as NBV, is equal to the cost minus the accumulated depreciation. So that is the definition of the carrying amount, and equally the determination of the same. So the other term which we have here is the recoverable amount. And for the recoverable amount, this is defined under IS 36 to be the higher of two values, to be the higher of the value in use and something known as the net realizable value or the fair value less cost to sell. So we can say that this is the higher, this is the higher of two values. So number one, we have the net realizable value, net realizable value. It is also known as the fair value less cost to sell, fair value less cost to sell. So therefore, the net realizable value or the fair value less cost to sell, this is the amount at which an asset can be sold at currently, and then we less any cost which will be incurred by the company in order to sell that asset. For example, for the company to be able to sell an asset, the company may be required to place an advert in the newspaper to be able to get a buyer. So that cost, any cost which will be incurred by the company for the company to be able to sell that particular asset, we refer to that as cost to sell. So we take the higher of that, or number two, something known as the value in use, value in use. So in this case, when we talk about the value in use of an asset, this is the present value of the expected cash flows to be generated from continued use of the asset, use of an asset, and from its disposal. So that's how we determine the value in use. So we discount, or we get the present value of the cash flows to be generated from the continued use of the asset and also from its disposal. So once you have these two values, for you to get the recoverable amount, you take the value which is higher than the other. And once you have the two values, that is the carrying amount and the recoverable amount, you just need to compare them. And if now this recoverable amount is less than the carrying amount, then in this case we are saying the asset will be considered to be impaired. And therefore what IS 36 requires is that once the asset is impaired or the recoverable amount is less than the carrying amount, the company or the entity should go ahead and basically recognize something called the impairment loss. So how is the impairment loss therefore determined? So the impairment loss, this one is equal to the carrying amount, abbreviated as CA, minus the recoverable amount, abbreviated as what? As RA. So therefore, that is the first thing you need to know here, that impairment of the asset, we are saying, is that particular reduction in the value of the asset such that now the recoverable amount of the asset is less than the carrying what? Amount. And basically, you have said that the carrying amount of the asset is the same with the net book value, and then the recoverable amount is the higher of two values, the value in use and also what we refer as what? The value in use and the net realizable value. So next, let's look on the recognition and also the measurement of impairment loss. Recognition and measurement of impairment loss. Impairment loss. So first of all, we talk about the measurement. We are talking of how the impairment loss should be determined, and that is something we have mentioned here, that impairment loss actually is recognized or is determined by taking the carrying amount minus the recoverable amount. But equally, you have to remember here that when we talk about the recoverable amount of an asset, basically we have said that this is always taken to be the higher of two values. Number one, the net traceable value, or number 2, what you refer as the value in what? In use. The value in use. And the difference between carrying amount and the recoverable amount is the impairment what? Loss. Now, it is also important for me to mention here that IS 36 requires the entity to recognize an impairment loss whereby the recoverable amount of an asset is found to be what? To be less than the carrying what? Amount. Maybe you can just mention that here, that impairment loss is recognized when the recoverable amount of an asset is less than the carrying amount, which is the CA, abbreviated as what? The CA. And in this case, you have said that the amount of impairment loss always will be equal to the carrying amount minus the recoverable amount. Now, this particular impairment loss which has been determined, how is it then accounted for by the company? How is it accounted for? So this particular impairment loss, or the accounting treatment of this particular impairment loss, depend with the model which is used by the company, or the accounting model used by the company as permitted under IS 16. So if you can be able to recall what you covered in the lower level, you are told that whenever the company has acquired a number of items of PP, items of property, plant, and equipment, those items should be accounted for in accordance with International Accounting Standard number 16. And that standard IS 16 permit the company to use two models, the cost model and the revaluation model, when accounting for those particular items of what? Of PP. So therefore, in terms of how we account for this impairment loss, it depends with whether the asset is accounted for in the books of account using the cost model, or using now the revaluation what? Model. So therefore, here we can say that impairment loss, or basically we can say accounting for impairment loss depends on whether the asset is carried at historical cost or the revalued amount. So in this case, when we talk about the asset being carried at historical cost or revalued amount, this means that in terms of how we account for the impairment loss, this will always depend with whether an asset in the statement of financial position is recorded at the historical cost, or basically at the revalued what? At the revalued amount. So first of all, we say that for the assets carried, or we can have this as Roman 1, for assets carried at historical cost. So these are those particular assets which are accounted for by the company using the cost model. So mean that this particular asset in the balance sheet, they are recorded there at what? At the cost, and then they are what? Depreciated. So any impairment loss arising from or arising in relation to such asset, the full amount is recognized as an expense in the income statement. And then also what International Accounting Standard, that International Accounting Standard number 36 requires, is that anytime the asset is impaired, then its carrying amount should be reduced to an amount equal to the recoverable amount. So therefore, for the asset carried at historical cost, we can say the full amount of impairment loss is recognized as an expense in the income statement, in the income statement. And how do we account for that particular impairment loss? We debit it in the income statement. By debiting that impairment loss in the income statement, it means that we are accounting for that as an expense, and specifically, that impairment loss should be included as part of the administrative expenses. And then what we do, we credit now the asset account. So, and the reason why we credit the asset account is to reduce the carrying amount of that particular asset to an amount equivalent to the recoverable amount. So that's how we account for the impairment loss for those particular assets which are carried at historical cost. Number two, we have those particular assets which are carried at revalued amount. So we say for the assets carried at a revalued amount, So how do we account for the impairment loss? So let's assume that we have an asset which is carried at revalued amount, and an impairment loss is determined as far as that asset is concerned, and maybe assuming the impairment loss is something like 10 million. 10 million. And because this particular asset is carried at revalued amount, it means that the asset was previously revalued. And therefore, let's assume that a revaluation reserve, or basically a revaluation surplus which was recognized in relation to this particular asset, maybe was an amount of how much? 8 million. 8 million. So therefore, how do we account for that particular impairment loss of 10 million? So first of all, we say that an impairment loss which is equal to the revaluation reserve will be charged in the revaluation reserve account. So our impairment loss is 10 million. So therefore, impairment loss which is equal to this will be 8 million. So the impairment loss equal to the revaluation reserve is 8 million. And then the difference, which is 2 million, we refer to this as excess impairment loss. Excess impairment what? Loss. So the impairment loss equal to 8 million, we are saying that that one should be charged in the revaluation reserve account, whereas now the excess impairment loss, that is now what we charge in the in the income statement. So therefore, for assets which are carried at revalued amount, impairment loss equal to revaluation surplus, equal to revaluation surplus, is charged in a revaluation reserve account, revaluation reserve account, while the excess impairment loss, is recognized as an expense, in the income statement. In the income statement. I've given a small illustration there where we have said we assume we have an asset which is carried at revalued amount, meaning that that asset was previously revalued, and maybe the revaluation reserve or the revaluation surplus arising from revaluation of that asset was what? Was 8 million. And during the current financial year, an impairment review has been carried out, and the asset is found to be impaired with 10 million, which now will be the difference between carrying amount and what? The recoverable amount. So what you have said is that in terms of how we account for this impairment loss of 10 million, an amount of 8 million will be charged in the revaluation reserve account, whereas now an impairment loss equal to 2 million, which is now excess impairment loss, that is now what we take to the income statement. And therefore, the accounting entry for this impairment loss is that impairment loss of 8 million, this one will be debited in the account which is called the revaluation reserve account. The excess amount or the excess impairment loss of 2 million, this one will be taken to the income statement as an expense, specifically administrative expense, and then the full amount of impairment loss, which is 10 million, this one will be credited in the asset account. And I've said that the reason why we credit the asset account is to reduce the carrying amount of the asset to an amount equal to recoverable amount. So that's how we account for any impairment loss. And in this case, you can see that in terms of how we account for this particular impairment loss, depend with the model, the accounting model used by the company to account for the items of what? PP. Whether the company is using the cost model or the revaluation what? Model. It is also important here to note that according to this particular standard, IS 36, an entity is required to carry out an impairment review at the end of each financial year if there is some evidence which shows that the asset could be impaired. And therefore, IS 36 has gone further to outline some of the factors which could indicate that the asset could be what? Could be impaired. So therefore, next, I want us to look on those particular factors. So we refer to them as indicators of impairment. Indicators of impairment, which we are saying are those factors which indicate that the asset could be impaired. And these factors are classified into two categories. We can start with the internal indicators of impairment. So the internal indicators, generally, we can say that these are those particular factors which shows that the asset could be impaired and which are within the control of the organization, which are within the control of the entity. So which are those particular factors? One is evidence of obsolescence of the asset. Evidence of the obsolescence of what? Of the asset. When we talk about the asset becoming obsolete, basically this means that the asset is no longer needed in an entity. Maybe, for example, the production capacity of an asset is too low, and therefore such an asset cannot be used in what? In an organization. Number two is what we refer as the physical damage of an asset. Physical damage of an asset. If, for instance, the company buy a motor vehicle and that motor vehicle is involved in a road accident and therefore it is physically damaged, that is also another indicator or another factor which could show that the asset may be impaired and therefore requiring a company to carry out impairment what? Review. Number three is the asset becoming idle. The asset becoming idle. The asset is no longer used in the organization or in the entity. Number four is where the performance of an asset, performance of an asset being worse, worse than what was previously expected. Maybe the company had acquired an asset and the company had some expectation regarding the performance of that asset, but now the asset is performing worse than what was initially anticipated. So that is the other factor which should shows that the asset could be impaired. So the other one is the plan, a plan to do what? To dispose. A plan to dispose of an asset. To dispose is basically to sell an asset. Plan to dispose or sell an asset before the previously expected date. Before the previously expected what? Date. The other factor which shows that the asset could also be impaired is the plan to discontinue. Plan to do what? To discontinue. Discontinue the operation. To discontinue the operation to which the asset belong. To which the asset belong. So for example, in this case, a company may be producing some product which are meant for export, but the company intend to stop exporting such a product. What that means is that there are some plans to discontinue the operation to which the asset do what? Belong. So therefore, if any of these particular factor exists, any of this particular factor or any of these factor exists, then it basically means that the asset could be what? Could be impaired. And therefore, what IS 36 requires is that such an organization, such an entity should proceed, carry out impairment review by comparing the two values, the recoverable amount of the asset and the carrying amount, in which case, if the recoverable amount is found to be less than the carrying amount, then the organization should proceed, the entity should proceed and recognize what? The impairment loss. So then let's proceed and look on external factors which could show that the asset is impaired. So external indicators of impairment. So external indicators are those particular factors which shows that the asset could be impaired and which are not within the control of the entity, One of it is a carrying amount of entities' net assets, exceeding market capitalization. So the other external indicator of impairment is what you refer as a increase in market interest rate, which affect the discount rate, and thus reducing the value in use, in use of an asset. So the other external factor which could show that the asset is impaired is a significant changes in the technological, legal, or economic environment with the adverse effect. Basically, when we talk about adverse here, we are talking of unfavorable effect on the entity. And number 4 is observable evidence that the value of the asset, observable evidence that the value of an asset has reduced during the current period. So all these are external factors which could indicate or which could show that the asset may be impaired. And therefore, what you have said is that International Accounting Standard number 36 requires that anytime any of these particular factor exists, an organization or basically an entity has to carry out now the impairment review and basically determine whether the asset is impaired. So therefore, it is important for you to note those particular factors. You may come across a question whereby the examiner is requiring you to do what? To outline those particular factors which could indicate that the asset may be impaired. So I want us to look on an illustration question as far as the computation of impairment is concerned. Determination of impairment loss is concerned. And this is a question which was tested in the sitting of November 2020. So specifically question number 1C. So we go through that question and then we see what was required. So this is a question for November 2020, question number 1C. Question 1C. So the question reads, ABC Limited own a machine which originally cost shillings 10 million. The accumulated depreciation associated with the machine was shillings 2.5 million as at 31st of December 2019. A mechanical engineer assessed the machine in early January 2020 of 2020. The engineer's report stated that similar damaged machine had sold for shillings 1 million in the recent past. In addition, due to the machine unique nature, significant advertising cost of shillings 100,000 would be incurred to find the buyer. The machine was not covered by insurance. In the other paragraph, we are told a power surge during the year ended 31st of December 2019 reduced the machine production capacity and shortened its expected life. ABC Limited management accountant estimated that the damaged machine would generate cash flows of shillings 3 million per annum over the expected remaining useful life of 3 years. And then you're told ABC Limited cost of capital is 9%. And then you're told no impairment loss or no impairment on the of the machine had been recorded in the accounts. So we are required, in context of International Accounting Standard number 36, which governs the impairment of asset, outline the necessary accounting treatment of the machine given the information above. And then you're told note the present value of the present value interest factor of annuity of shillings 1 per year at the rate of 9% for 3 years is 2.5313. And basically the examiner there had given 4 marks. So if you check on what was required here is we outline the accounting treatment of the machine given the above what information. So the first information which is important to us from this particular question is what you're given in paragraph 2 of that question, that there was a power surge, and that power surge reduced the machine production what capacity. So basically what that means is that at the end of the year 2019, there was some evidence which showed that the machine could be impaired. And therefore, as a result of that, and also in accordance with the International Accounting Standard number 36, this company will have to carry out or must carry out the impairment what review by comparing the two values, the carrying amount of the asset and the recoverable amount, in order to determine whether this particular machine is what is impaired. So therefore, this was the expected solution. We say that on 31st of December 2019, ABC Limited was required to do what? Required to carry out impairment review in accordance with the International Accounting Standard number 36, since there was evidence that the machine could be impaired. Could be impaired. So that is the first thing which was expected of you. You say that at the end of 2019, this company had to carry out impairment review in accordance with International Accounting Standard number 36, simply because there existed some evidence which showed that the machine owned by this company was impaired. And we have said this evidence is that reduction in machine production capacity, or basically the performance of the machine being worse than what was expected. So whenever the company is carrying out the impairment review, the company is expected to compare two values, the recoverable amount and what? The carrying amount. So therefore, as far as this machine is concerned, we need to determine those two values, the carrying amount and also the recoverable amount, and then we check whether the recoverable amount is less than the carrying amount. If that is the case, then we have to proceed and we determine what? The impairment loss. So therefore, this impairment loss on this machine will be determined on 31st of December 2019. It is important for you to have the formula for determining the impairment loss or computing the impairment loss, and this is computed by taking the carrying amount minus the recoverable amount. So let's start by determining this carrying amount. The same with the asset net book value, and this is equal to the cost minus the accumulated depreciation. This information is given to us in paragraph 1. We are told that the cost of this machine was 10 million. The accumulated depreciation was what? Was 2.5 million. 2.5. So that means that the carrying amount, the net book value of this machine at the end of 2019 was how much? Was 7.5. So we already have that carrying amount. So next, we determine the recoverable amount. So let's have that here. And the recoverable amount, this one we said, is the higher of two values. Number one, the net realizable value, which is also the same with the fair value, less cost to sell. So this we said is the value at which an asset can be sold at currently, and then we less any cost which will be incurred in selling that what? Asset. There is some information we are given which will help us in terms of computing this. In the first paragraph, sentence 2, we are told a mechanical engineer assessed the machine in early January of 2020, and then you're told the engineer's report stated that a similar damaged machine, remember our machine here was damaged as a result of that power surge. So we are told engineer's report stated that a similar damaged machine had sold for shillings 1 million. So mean that if the company decide to sell this particular machine which has been damaged by the power surge, the company will be able to sell it currently at 1 million. That 1 million is the fair value, the current market value of the asset. And then to that, we are going to do what? To less any cost which will be incurred in selling that asset. And we are told, in addition, due to the machine unique nature, significant advertising of shillings 100,000 would be incurred to find a seller, to find a buyer. For the company to be able to get a buyer of this machine, the company will need to advertise, to put an advert, maybe in the media, costing 100,000. That is now the cost to sell. So meaning that the net realizable value of this machine is 900,000. So we have that. Then next, we determine the value in use. Remember, we have said the recoverable amount is the higher of these two values. So how do we determine the value in use? This is equal to the present value of the expected cash flows to be generated from the continued use of the asset and also from its disposal. Equally, there is some information which you are given as far as this is concerned. In paragraph 2, sentence number 2, we are told the ABC Limited Management Accountant estimated that a damaged machine would generate cash flows of 3 million per annum over an expected remaining useful life of 3 years. So therefore, to determine the value in use, what we just need to do is to get the present value of those particular estimated cash flows. And to do that, we take now the estimated cash flows of 3 million, and you're told that this is the annual cash flows. This is an annuity. So this is the cash flow to be generated per annum over the next 3 years. So to discount this, to get the present value of this, we multiply this with the present value interest factor of annuity, and we are given the company's cost of capital, which is 9% for 3 years. And if you go to where we have the requirement, we are given a note there, and you're told the present value interest factor of annuity of shillings 1 per annum at 9% for 3 years is 2.5313. So already we are given this particular figure as 2.5313. So we need to multiply that with 3 million, and automatically that will give us now our what? Our value in use. So therefore, let's get the value in use here, which will be 3 million times 2.5313, and that will give us shillings 7,593,900. So that is now the value in use. So having the value in use, finally what we need to do is we need to determine the recoverable amount. And the recoverable amount, we take the higher of these two values, the higher of those two values. So therefore you can say the recoverable amount of this machine is this one. So this one is the one which is higher than that, is the shillings 7,593,900. So that is the recoverable amount. So what we need to do then next is we check whether our machine is impaired or not. Remember what you have said is that an asset is said to be impaired whereby the recoverable amount is less than the carrying amount. So already we have the recoverable amount here, which is 7,593,900, which is now our recoverable amount. What about the carrying amount? Carrying amount is 7.5 million. 7.5 million. So what we need to do is basically to check is this recoverable amount, is our recoverable amount, this one, is it less than the carrying amount? Is this less than this one? No. So this one is the one which is less than this one. So therefore the recoverable amount is not less than the carrying amount. Which conclusion then do we make? The conclusion here is that this machine is not what? Impaired. Why? Simply because the recoverable amount is not less than carrying amount. So therefore, that is the answer here. We say that the machine is not impaired, since the recoverable amount, that is RA, is not less than carrying amount, is not less than carrying amount, that is CA, is not less than carrying amount. And that means that no impairment loss which will be recognized simply because our asset is not what? Is not impaired. So therefore that is it, that what was it required as far as that question was concerned. And basically by doing that, then you were to get how many marks? 4 marks. So therefore, we stop at that point. Once we come back in our next session, we are going to look on how we determine the impairment loss in relation to the cash generating unit, and equally, how do we go ahead and allocate that particular impairment loss as far as the cash generating unit is concerned. So see you in the next session.